Hello everyone, and today I am going to discuss the most well-known topic of daily bias. Today we're going to cover how can you identify daily bias. Not mechanically, you need to understand the market, you need to understand the ICT concept as well. So let's get into it. I'm on the NQ chart. I'm going to show you the analysis that I sent to the Discord group here. As you can see, uh, I sent out the analysis about the price being bullish this week, and I'm going to talk about why now, and I'm going to also talk about some of the main factors of identifying a bias. Let's go over the weekly. On a weekly basis, we're at all-time highs, guys, and this week we previous week we made a swing point on the weekly time frame, which you guys know that old highs and old lows are the targets of the market. So this is the old weekly swing point, 2 weeks before, and we have our internal range liquidity, which is this fair value gap right here. This your internal. So what happens after price mitigates internal range liquidity? It goes to external. As simple as that. That is really simple. Anyone can get this, right? Your internal is this fair value gap, and your external is this swing point right here. That's a minimum target. Price will reach higher prices because we're at all-time highs, but this was the minimum. Also, what I want you to guys use in your trading, how to determine your bias in your trading, is SMT. SMT is really one of the best concepts I have ever learned in ICT. I used to not use it, and when I started using it, it had really good results. You can't mechanically trade SMT, but if you have an understanding on the market, SMT is going to help you determine a bias, be much more precise with it. As you can see, NQ was like traded into this fair value, but if I go into the ES chart, ES actually failed to mitigate the fair value here. So what do we have here? We have an SMT divergence between these correlated pairs. We have a cracking correlation now. That's yes. That's when you know that now it's the time price to move higher. So if I go on the daily, what do we have here? We have this swing point. Monday we make a low of the week. We have this swing point here. So we took this sell side liquidity down here, and what do we have down here? We have an SMT divergence. As I said in here, we had a turtle soup on this low, and we have an SMT on this low. So your target from a weekly fair value gap is the buy side liquidity, which is an all-time high, which is an external range liquidity. As simple as that, guys. So after this SMT here on this lows, as you can see, ES took this low and NQ did not. After that as SMT, what do you target? You target the buy side. Now let's go on a lower time frame and see how you could target this high on a high time frame, lower than that. If I go on a 4-hour time frame, when the time came for market to be bullish, to target this swing high, this swing point, and target that swing point, what do we need as well? What do we want to see? If ES failed to displace above this highs and ES is much more below, we're pretty much going to have another SMT divergence, and you can expect that easily. As you can see, NQ came down, souped this low as well, and displays up to above these highs, and we have a balanced price range down here, and we have this beautiful order block as well. If I go on a ES chart, as you can see, ES failed to displace above these highs, so what we could expect is an SMT divergence again on this low. So ES actually took this low out, we have an SMT there. ES failed to make a higher low, and ES made a lower low actually, and NQ made higher low. So this is your indication the price is going to seek from now on, seek buy side and start the major move that you're waiting for on a high time frame. See, this is the time, like 7 a.m. 7 a.m. New York local time. This is the correct time when price is going to seek buy side with an SMT. So I would suggest you guys to use SMT. I'm gonna give you more examples here. So if you look at the market here, what do we see? Let's analyze this market. We have an all-time here, which price is about to reach. And what do we see on the left? On the left, what do we see? We see all the bearish PDAs getting disrespected. This is your sign that market is bullish. As simple as that. This is your sign that market is bullish. All the bearish PDAs are getting disrespected, and bullish PDAs, this fair value gap here, this order block down here, are getting respected. So order flow is bullish here before we prove otherwise, right? So if the order flow is bullish, what do you want to do? You want to see, you want to look for a bullish PD array, and you want to work from that bullish PD array. I'm gonna tell you this, guys, that if you are trading on a 1 minute time frame and look for entries as an intraday trader, uh, you're gonna need a high time frame bias, because what the highest probability trades come from aligning with your bias, with your higher time frame premise, because that's where that's how the markets move, that's how the markets operate. If you are trading ICT concepts, you want to trade high basis based off of higher time frame, because that's how the market makers move the market. They're not looking at the 1 minute chart, they're not looking at a 5 minute chart, they don't care about that. They look at the daily, weekly, and monthly time frame. Those time frames going to give you the highest probability trades there is on the lower time frame as well. So what do you want to see here? What do we see on the left? We see a breaker block here, which is an ICT breaker block. ICT breaker block here. What do we want to see? What do we want to see if we broke about this high? We're at the all-time highs. I said this earlier. If we are at the all-time highs, what do we want to see? A bullishness continue. It's gonna go a lot farther than you guys think. So are gonna we're gonna see what this bullish PDA to get respected and mitigate this breaker block here, right? So after we come down there, so we left the short-term low, this bullish PDA array was respected. What are we gonna see now? Probably if we see some weakness here, you're gonna see bearish prices down to this low, because this is a short-term low of the price, which gets turtle souped a lot. I talked about the turtle soup before. So what do we have here now? We have a soup of the previous daily high, and what do we want to target? This swing point down here, and potentially this breaker block. So what do we see here? We came down into this inefficiency as well, a breaker block, and what do we have here? Look at this wick. Look at this wick, guys. We took sell side here. We mitigated this, and look at the wick. Does this look like the price is going to be bearish? No. After this, you're gonna see these bearish PD areas getting disrespected. So what I want you to guys look at now is previous daily highs and previous weekly highs to target them. It's really underrated in ICT concepts to target those. I don't know why, but if you look at the previous weekly highs and previous daily highs, those are the easiest drawn liquidities that you can have. So what is this previous weekly high that we can target, and what is this on Monday? What can we target on Tuesday? Previous daily high. Those are the easiest targets that you can take, and those are the low hanging fruits of the price to target. Yes, price could go much higher, but your targets on the lower time frame should be this high, and if when we reach up here, it could be this high. So this price, see, we almost reached the previous daily high the next day. We had a manipulation down, the power of 3, and distribution to the upside. The next day, what did we do? on Wednesday. We have a expansion to the upside, taking out previous weekly high and previous daily high as well. Those are the best drawn liquidities that you can have on a lower time frame. So if you see a previous daily high or previous daily low not being taken and not being liquidated yet, you're gonna target those highs and lows. Now what I want to do is outline the mistake that most ICT traders do, because you guys know that if you're an ICT trader, we don't like pattern trading, right? We don't like patterns like bullish flag, bearish flag, head and shoulders, inverse head and shoulders, W patterns, all the bullshit is out there. We don't like pattern trading, right? But I bet you guys that most of the ICT traders are pattern traders, and now I'm going to show you that why most of the ICT traders are pattern traders as well. I used to be like this before I knew what ICT was really teaching out there, really teaching to his pupils, to his students. And now I want you to guys listen. As we remember that we discussed at the beginning of this video, we were bullish. We had an SMT on the lows, on these lows, and we soup this low. So we were bullish till the external range liquidity, right? So on this day, the Tuesday, what do we have? What targets do we have before we reach this high? We have this high and this high as well. This buy side liquidity here and this buy side here. So if I go on the lower time frame, what do we want to target? When we have a 9:30 open here, we displace up, we make a what? We make what? A 30-minute, no, a 15-minute fair value gap. This is your first stage of distribution. This fair value gap is because we have a smart money reversal here, down here. Smart money is buying to this buy side and to the external buy side there. And this fair value gap is your buy. What most of the ICT traders are seeing here is price taking up buy side, going on a 1 minute time frame. After taking out the buy side, what are they going to see? We took buy side, now we're going to go for sell side, and they are taking this 2022 model down here. We have buy side taken, we have a market structure shift here. And what are they taking? They might be taking this breaker block, or either this fair value gap up here, or even worse, this fair value gap here. If they are taking this trade, most of the traders are actually, I have seen many traders took this. This is what's called a pattern trading. Order flow is bullish. This fair value gap is your buy signal. You should be looking for buys from here, not selling from here to your imaginary sell side down here. This is what a difference is between liquidity run and liquidity grab, because this is not a liquidity grab to go down. This was a liquidity grab to these lows and to go up. This is what liquidity run looks like. This was your external high. From external, price is seeking what? Internal. What is internal? This fair value gap is your internal range liquidity. Price comes down into the internal and goes higher to the external draw on the higher time frame. This is what you should be buying, not the liquidity sweep, the original liquidity sweep of buy side and trying to target the sell side, which is imaginary. Hopefully you guys enjoyed the video and learned something new. If you did, like the video and subscribe because it helps me a lot. And as always, have a great trading. Goodbye.